Welcome back. Today we're running through this week's IPOs, 3 that just hit the market and 1 coming up next week, so you know exactly which new listings are worth watching. For each one, we'll hit the business, the IPO itself, the outlook, and an educational trade plan, so stick around to the end. Today, let's dive into Bending Spoons SPA, a renowned player in the mobile app development arena. Founded with the mission to create top-notch applications, Bending Spoons has made a name for itself by delivering engaging and user-friendly apps across numerous categories, from productivity tools to entertainment solutions. The company operates in the booming tech sector, which has seen an explosion of mobile usage and demand for innovative applications. With its focus on quality and user experience, Bending Spoons is well-positioned to compete in a market that's constantly evolving and growing. As mobile apps continue to become integral to our daily lives, companies like Bending Spoons are at the forefront, driving innovation and setting new standards in the industry. Now, let's talk about the IPO details of Bending Spoons SPA. The company officially listed on the Nasdaq on July 1, 2026. They set their initial price range between $26 and $28, ultimately pricing the shares at $29. This pricing was well received, and they raised a whopping $1.68 billion in the process, indicating strong investor interest. As of now, the stock is trading at $35.93, reflecting a positive reception from the market. Investors often look for signs of a strong debut during IPOs, and Bending Spoons has certainly made a splash with its entry into the public markets, showcasing the appetite for innovative tech companies. Looking ahead, the outlook for Bending Spoons seems quite bullish in the short term, especially considering their strong debut at current trading performance. However, as with any investment, particularly in the tech sector, it's essential to keep an eye on broader market trends and how the company continues to innovate its app offerings. For those considering a trade plan, an educational entry point could be around the $30 mark, with a target price of $40, given the positive momentum seen so far. However, it's crucial to remain cautious of potential market volatility, which is common in tech stocks. Always be mindful of the risks. If the market sentiment shifts, or if the company faces unexpected challenges, it could impact stock performance. Let's dive into ITG Inc. This company is making waves in the tech sector by providing innovative solutions designed to enhance business operations. They specialize in software development and cloud-based services, which have become increasingly vital as more organizations transition to digital platforms. ITG aims to streamline processes across various industries, helping businesses improve their operational efficiency. With technology continuing to evolve, ITG is positioned to compete in a highly dynamic market, catering to the growing demand for efficient and effective tech solutions. It's exciting to see how they will navigate this competitive landscape. Now, let's talk about the IPO details. ITG Inc. officially listed on the Nasdaq exchange on July 1, 2026. The company offered its shares at a price band ranging from $19 to $22. However, the final pricing settled at $16, which is quite interesting considering it's below the initial range. As of now, ITG's shares are trading at $15.46, which means they are still hovering below the IPO price. This can often create different trading scenarios for investors, as it reflects market sentiment and demand for the stock post-IPO. Keep an eye on how this stock performs in the coming days as investors digest this new entry. Looking ahead, the outlook for ITG Inc. presents some intriguing possibilities. In the short term, we might see some volatility as the market adjusts to this new listing. Given that the shares are currently trading below the IPO price, there could be opportunities for nimble traders. For a long-term perspective, if ITG can effectively execute its business model and capitalize on its growth potential, it could see a nice upward trajectory. Now, if you're considering a trading plan, you might think about entering around $15, where the stock is currently trading. If you see it rallying, an exit plan around $20 could be a reasonable target, depending on how well the company performs. However, always remember the key risks. Market fluctuations and company performance can affect your investment. Neutron Holdings Inc. trading under the ticker LIME, is making waves in the micromobility sector. Founded with a strong mission to innovate urban mobility, Neutron Holdings specializes in providing electric scooters and bikes. As cities worldwide seek sustainable transport solutions to reduce congestion and pollution, companies like Neutron are perfectly positioned to capitalize on this growing trend. They are competing against established players such as Lime and Bird, which indicates a lively and competitive market. With urban areas increasingly adopting micromobility solutions, Neutron's technology and services could play a significant role in shaping the future of urban transport. It's an exciting time for companies in this sector, and Neutron is at the forefront of this transformative wave. Now, let's dive into the IPO details for Neutron Holdings Inc. They officially listed on the XNAS on July 1, 2026, and the company has been generating buzz in the market. The offer size for this IPO was quite substantial, coming in at around $173.9 million. Investors had a price range to consider, with the low end at $24 and the high at $26. Ultimately, the final price was established at $25, landing right in the middle of that range, which suggests a balanced demand from investors. As of now, the stock is trading at the same price of $25, indicating initial stability post-IPO. It will be crucial to monitor how it performs in the days and weeks ahead, as more investors get involved. Looking ahead, the outlook for Neutron Holdings Inc. seems promising, especially in the short term. The micromobility sector is heating up, and Neutron could benefit from increased urban adoption of electric scooters and bikes. For those considering an educational entry plan, a potential buy-in around $24.50 could offer a favorable position if the stock shows stability. As for a long-term view, if Neutron can carve out a significant market share and innovate effectively, there could be substantial upside. However, it's essential to keep an eye on key risks, including intense market competition and potential regulatory changes that could affect operations. Always remember to assess your risk tolerance and do thorough research before making any trading decisions. Hey everyone, today let's dive into TARX Pharma Limited, an exciting upcoming IPO that's generating a lot of buzz in the biotech sector. TARX Pharma is dedicated to developing innovative treatments, particularly for unmet medical needs. This is a critical area in healthcare, as it often involves finding solutions for conditions that currently lack effective therapies. With a focus on pharmaceuticals, TARX is at the forefront of creating cutting-edge therapies that could potentially change lives. The biotech industry is known for its rapid advancements and high growth potential, making it an intriguing space for investors. So, keep an eye on TARX Pharma as they prepare to make their mark in this vital sector. Now, let's talk about the IPO details for TARX Pharma Limited. This company is set to go public on July 9, 2026. So mark your calendars. They are targeting a price range between $8 and $10 per share, which is a pretty typical range for an IPO of this nature. With an offer size of $50 million, this could generate significant interest among investors looking to get in on a promising biotech venture. The shares will be listed on the New York Stock Exchange, or XNYS, which adds to its credibility. As we approach the listing date, it'll be interesting to see how demand shapes the final pricing and the initial trading performance. Make sure to keep a close watch on any updates as we get closer to the big day. Looking ahead, let's discuss the outlook and trade plan for TARX Pharma Limited. In the short term, expect some initial trading volatility right after the IPO. It's common for biotech stocks to see wild price swings as the market reacts to the company's prospects. For those considering entry points, one approach could be to wait for the dust to settle post-IPO. Watch for any dips that might present a more attractive buying opportunity. In the long term, if TARX's pipeline products succeed, there is substantial growth potential, especially given their focus on innovative therapies. However, it's crucial to remember that investing in biotech comes with its risks. The sector can be highly volatile, and regulatory hurdles can impact product approval timelines. If this breakdown helped you out, do me a quick favor. Smash that like button and hit subscribe so you never miss an IPO analysis. And before you go, please let me know your thoughts down in the comments. Where do you see this one heading? What's the high and the low you're expecting? Are you bullish or bearish? And would you actually buy it? and drop the name or ticker of any other stock or IPO you want me